The global economy just experienced three massive shifts in the span of 2 weeks that most investors are completely missing. On January 3rd, U.S. forces captured Venezuela's president and seized control of the world's largest oil reserves. In Japan, their debt crisis just hit a breaking point with interest rates now at 30-year highs, threatening to unwind trillions in global investments. And China's rare earth mineral restrictions that could have crippled entire industries were just suspended until November 2026 in a last-minute trade deal. If you're an investor, these three events are creating investment opportunities that we haven't seen in decades. And this is exactly why I'm hosting a live investor workshop on January 27th, 2026, where I'm going to break down how these geopolitical shifts are reshaping entire sectors and creating specific investment plays for 2026. I'll show you the exact ETFs and strategies that could benefit from Venezuela's oil infrastructure rebuild, the Japanese yen crisis that's already moving billions in capital, and the critical mineral supply chain disruptions that are forcing companies to completely restructure their operations. It's completely free, but you need to register because we have limited spots available. The link is in the description below. Let me start with Venezuela because what happened on January 3rd changed everything. President Trump did not just remove Maduro from power. He announced that U.S. oil companies will now invest over $100 billion to rebuild Venezuela's entire oil infrastructure. And Venezuela isn't just any oil country. They're sitting on 303 billion barrels of proven reserves. That's 17% of the entire world's oil supply, more than Saudi Arabia and 4 times what the United States has. But here's what most people don't understand about this Venezuela situation. The reason why most people are missing the real story here is because they think this is just about removing a dictator. This is actually about reshaping global energy markets. When Hugo Chavez nationalized Venezuela's oil industry back in 2007, he kicked out American companies like ExxonMobil and ConocoPhillips, seizing billions in assets. Now, those same companies are being invited back in, but here's the problem. Venezuela's oil infrastructure is completely broken. According to state-owned PDVSA, their pipelines haven't been updated in 50 years. The country that once produced 3.5 million barrels per day is now only producing about 800,000 barrels daily. That's less than 1% of global production. And when President Trump met with oil executives last Friday to discuss Venezuela, the response wasn't what he expected. ExxonMobil's CEO told Trump directly that Venezuela is uninvestable in its current state. ConocoPhillips is owed nearly $10 billion from previous arbitration cases. These companies have been burned twice before. But here's where this gets interesting for investors. The Department of Energy just announced they're marketing Venezuelan crude, planning to sell 30 to 50 million barrels immediately. And Treasury Secretary Scott Bessent revealed that while the big oil companies are hesitant, smaller independent companies are calling them nonstop about opportunities in Venezuela. Now, if you believe this Venezuela situation will benefit the oil industry, and I'm not telling you what to invest in because I'm not a financial advisor, I'm just a guy on YouTube and personal finance is personal. But if this seems like an opportunity to you, there are ways to get exposure to the energy sector. Take a look at these ETF options. You have XLE, which is State Street's energy sector ETF that gives you exposure to the largest U.S. energy companies. There's also VDE from Vanguard, another broad energy ETF. Both saw massive inflows after the Venezuela News energy ETFs pulled in $493 million on January 6th alone, followed by another $226 million the next day. But Venezuela isn't operating in isolation here. And this is where things get really interesting, because what's happening in Japan right now could actually determine whether these oil investments succeed or fail. Most investors have no idea this Japanese situation is even happening. Japan is facing the biggest debt crisis of any developed nation right now, and it's about to impact every investor in America. Here's what's happening. Japan's national debt just hit 240% of their GDP. To put that in perspective, the United States has 126% debt to GDP, and everyone's already worried about our debt levels. Japan's situation is nearly twice as bad. But for decades, Japan got away with this massive debt because they had negative interest rates. Think about this. Negative interest rates mean if you lend Japan $100, they pay you back $90. That's the opposite of how lending normally works. The Bank of Japan was basically paying people to borrow money from them. This system worked because Japan was fighting deflation, not inflation. But now that's completely changed. Japan is facing inflation for the first time in decades, which forced their central bank to raise interest rates to 30-year highs in December 2025. And here's why this matters for your investments. For years, global investors have been borrowing money from Japan at essentially 0% interest through something called the yen carry trade. Wall Street firms would borrow yen for free, convert it to dollars, and invest it in U.S. stocks, real estate, even Bitcoin. This strategy pumped an estimated $1.5 to $2 trillion into global markets in 2024 alone. But now that Japan's interest rates are rising, borrowing yen isn't free anymore. All that money that was flowing into US markets could start flowing back to Japan. When you have fewer buyers in any market, prices fall. That's basic supply and demand. There's another piece to this puzzle. Japan is the largest foreign holder of US Treasury bonds outside of America. As Japanese bond yields become more attractive, their massive pension funds and insurance companies might start bringing money back home instead of buying US debt. That could push US interest rates higher, which impacts everything from mortgages to business loans. Now, if you think Japan's economy might benefit from this transition, and again, this is just educational, not investment advice, there are ETFs that give you exposure to Japanese markets. DFJ from WisdomTree focuses on small-cap dividend companies in Japan. EWJV from iShares gives you exposure to Japanese value stocks and mid-cap companies. But here's where this whole story comes full circle, because there's a third major player that connects both the Venezuela oil situation and Japan's debt crisis. And that's China, because what just happened between the US and China over rare earth minerals affects both energy infrastructure and global supply chains in ways most people don't realize. China just agreed to suspend their rare earth mineral export restrictions until November 2026. And most people have no idea how close we came to a complete economic disaster. China controls 94% of global rare earth processing. These are the materials that go into your iPhone, defense systems, electric vehicles, and energy infrastructure. In October 2025, China announced they were adding 5 more rare earth elements to their restricted export list: holmium, erbium, thulium, europium, and ytterbium. These might sound like random scientific names, but without them, F-35 fighter jets can't fly, wind turbines can't generate power, and advanced semiconductors can't be manufactured. When Trump met with Xi Jinping last month, this wasn't just about tariffs. This was about preventing China from weaponizing America's supply chain dependencies. The deal they struck suspended these restrictions, but only for 1 year. China also agreed to start issuing export licenses for materials they've been blocking since April 2025. But here's what's really happening behind the scenes. While China temporarily opened the export doors, they know exactly how long it takes to build alternative supply chains. Malaysia has rare earth deposits but lacks extraction technology. Australia's most advanced project won't be operational until 2030. The US has 1 operational rare earth mine in California, but we still send our materials to China for processing. China's economy is also under pressure right now. Their GDP is about $19.3 trillion compared to America's $30 trillion. But China's growing faster at 4.8% annually versus our 3.8%. Many economists say China could overtake the US as the world's largest economy within the next decade or two. And this connects directly to Venezuela, because guess who was buying 80% of Venezuela's oil before the US took control? China. The Venezuela operation didn't just secure oil for America, it cut off a major revenue source for China's economy. The rare earth situation also impacts Japan, because Japanese companies rely heavily on Chinese materials for their manufacturing. Any disruption in these supply chains affects Japan's ability to export finished goods, which impacts their currency and debt situation. Now, if you believe Chinese markets present opportunities, keeping in mind this is educational content only, there are ETFs that provide exposure. FXI from iShares gives you access to large-cap Chinese companies like Alibaba and Tencent. MCHI offers broader exposure across the Chinese economy. But remember, this trade truce expires in November 2026. Companies are using this year to frantically build alternative supply chains because they know these restrictions could return at any time. And this brings us to why all 3 of these situations, Venezuela's oil, Japan's debt crisis, and China's mineral restrictions, are creating a perfect storm of investment opportunities that most people are completely missing. Here's how all of this connects, and why these 3 events happening simultaneously creates opportunities we haven't seen in decades. Venezuela's oil infrastructure rebuild requires massive amounts of rare earth minerals and advanced materials, the exact materials China was restricting. With a trade truce in place, American companies can now access these materials to build the drilling equipment, refineries, and pipelines needed to bring Venezuelan oil online. But funding this massive infrastructure project requires capital, and that's where Japan comes in. As Japanese interest rates rise and the yen carry trade unwinds, trillions of dollars are looking for new investment opportunities. Venezuelan oil projects offering solid returns could attract some of that displaced Japanese capital. Meanwhile, China loses on multiple fronts. They're cut off from Venezuelan oil revenue, their rare earth leverage is suspended for a year, and they're watching America strengthen its position in both energy and critical minerals. This is exactly the type of interconnected global shift that creates generational investment opportunities. When 3 major economic powers are simultaneously restructuring their relationships, Smart investors can position themselves to benefit from these changes. The companies that win will be the ones that can navigate this new landscape. Energy firms with access to Venezuelan reserves, technology companies that secure alternative mineral supply chains, and financial institutions that can fund this massive global restructuring. On January 27th, I'm breaking down all of these opportunities in detail during my live investor workshop. I'll show you specific sectors poised to benefit, the ETFs that give you exposure, and the timeline for when these opportunities might peak. It's completely free, but spots are limited, and we're already seeing strong registration numbers. The link is in the description. I'd recommend securing your spot today because these are the types of shifts that create massive wealth transfer over the next few years. If you found value in this breakdown, the best way to say thank you is to share this video with someone else who needs to understand what's really happening in global markets right now. These connections between Venezuela, Japan, and China aren't being covered by mainstream financial media, but they're going to define investing opportunities for the rest of this decade. Thanks for watching, and I'll see you in the workshop.